Welcome to the Passive Mobile Home Park Investing Podcast with your host, Andrew Keel. This is the podcast where you can get the education you need to invest 100% passively in the highly profitable niche of mobile home parks.
Welcome to the Passive Mobile Home Park Investing Podcast. This is your host, Andrew Keel, and today we have a special guest in Mr. Alex Ramirez of Lucky Communities. Before we dive in, I want to ask you a real quick favor. Would you mind taking an extra 30 seconds and head over to iTunes to rate this podcast with 5 stars? This helps us get more listeners, and it means the absolute world to me. So thanks for making my day with that 5-star review of the show. All right, let's dive in. Alex is the co-founder and CEO of Lucky Communities. Alex and his partner, Zach Kupperman, bring a combined 25 years of experience in operations and development in the housing industry. Both founders were born and raised in New Orleans and continue to reside in the Big Easy with their families. When Alex's mom immigrated from Colombia in the early 1980s, her first home was in a mobile home park, making this yet another reason why Alex is so passionate about the space. Alex, we are excited to welcome you to the show.
Happy to be here, Andrew. Thank you for having me. I've listened to your show for quite some time now, since the beginning. And so it's an honor to be here with you, man.
Yeah. It was great meeting you at the MHI Congress and Expo in Orlando here back in April. So I'm glad we were able to connect. And I think this will be an awesome interview so our listeners can learn more about you and Lucky Communities.
Absolutely. I've been in the business in real estate, I should say, real estate investing on my own or with partners for the past 10 or 12 years. But I think, relatively speaking, I'm a newbie to the mobile home park space. We founded our company in 2021. And so MHI, where we met, was my first experience at that particular conference. So it was great. It was great to meet people from, all over the country, particularly from the industry. And no doubt it's true what they say about folks in the industry itself, that everyone's friendly and willing to lend a hand. So it was a great experience.
Yeah, that's awesome. Alex, maybe you can start out by telling us your story, how you got into manufactured housing, and how you came up with the name Lucky Communities.
Absolutely. Well, I've always known that I wanted to be in real estate. Growing up, I was always around it. My parents were able to put together a small portfolio of townhomes. And so they were the type of folks that kind of put their sweat, blood, and tears into it. They did it the old school way without any leveraging, saved up their money and did all the work themselves. And, I knew that there was a better way of doing it. And my parents pushed me to finding that better way. But yeah, so just kind of taking a step back from that, I'm, as you said, born and raised in New Orleans, Louisiana. If you guys have never been here, come on down. It's a great place. The hospitality is second to none. But I left for school, went to Rhodes College in Memphis, Tennessee. Spent my 4 years there. After that, lived in DC, working for Equity Residential, actually, as a leasing consultant. After doing that for maybe 3 or 4 years, moved back to New Orleans. This is now 2009. And I wanted to be part of the revitalization efforts after Katrina, especially knowing that it's my home city, and as well that I wanted to be part of the real estate revitalization. Prior to Katrina, New Orleans was always known as a brain drain, if you will. I mean, no one ever came back. I never expected to come back. But, after Katrina, a lot of young people saw sort of the opportunity to come and make a difference. And I wanted to be a part of that. So moved back home. Started working for the New Orleans Redevelopment Authority. We were tasked with essentially putting those properties, those privately owned properties. There's a program called Road Home, and it was a statewide program where the state bought back those homes from private citizens who weren't interested in coming back into the state, or in our case, the city of New Orleans. So instead of just letting those homes, those dilapidated properties, just sit there privately owned, the state bought them back. We were then tasked in terms of working with the different neighborhoods to come up with a disposition plan. So did that for about a year, but I've never been someone to really do well in sort of the large kind of corporate environment. I've always known that I wanted to go off on my own. So in about 20, I think this is now 20, end of 2010, start of 2011, I moved into ground zero into one of these neighborhoods that had pretty much all abandoned properties. And I did the opposite of what any smart investor should do is I moved into the nicest home in pretty much ground zero, where there was just, I was surrounded by vacant properties. This was before I had my wife, before I had kids. So it was just me. I was like, you know what, I'm just going to get in there and see what happens. As anyone knows, it's kind of hard to get into real estate as a young entrepreneur with very little income. So, took $5 with an FHA loan, bought my first property, then started calling up folks who owned the properties next door who were abandoned. That kind of led into a business there where I founded CSM Realty, and I was able to buy abandoned properties. This is again 2009, 2010, after Katrina, after the bubble. Things were just sitting there, right? So at that time, I picked them up for little to nothing. And once I started renting those properties, I started kind of looking into the short-term rental industry as well. Again, this is before it was saturated with the sort of listings and popularity that we see now. So it did really well, especially New Orleans, where it's such a, it's a city that takes in a high amount of tourism. The demand was there. That got me into the hotel business, started developing boutique hotels in that same area of New Orleans, which is mid-city. Met some great business partners along the way. And then fast forward to 2019, all of a sudden, we have 3 boutique hotels. I'm finding myself in a position where I'm spending the majority of my time managing hotels, which was never the plan. It just kind of happened. One of those investors that we had in the hotel brought me a mobile home park deal, and I knew nothing about it. And I looked at the numbers, and that was it. I never looked back at that point. So that's 2019. In terms of new business, that's what I focused on. 2020, the pandemic hit. Now we're playing defense with the hospitality portfolio. No one knows what's going on. Andrew, you remember those times. It feels like a long time ago, but it was maybe 2 years ago, and we literally had no answers. Literally, the world stopped turning, right? And so we played defense. Thankfully, the PPP programs saved us. Without it, a lot of businesses wouldn't be here today. Frankly, it's hard to imagine how the economy would look like without those programs. So 2021 came along, and we sort of started ramping up again with the mobile home park ambition, and that is when we founded Lucky Communities. So that is the long answer to the history of where I come from. The name Lucky, you asked, that is, we know we wanted to have a different name. There's a lot of great companies out there, but there's a lot of Eagle Rocks or Blackstone, or you have a very specific name to your name to your company as well. But the reason it made sense for us is because for us, lucky is to be lucky. The act of getting lucky it's a mindset, right? The harder you work, the more focused you are, the luckier you get. Any books that you read about these successful entrepreneurs, you'll find that they got lucky after they put in the work. So for those 2 reasons, we decided to stick to the name, and Lucky Communities was born in 2021.
I love that. That is awesome. I love the origination of the name there. That's super cool. Tell us more about the hospitality business. Like, do you still own those boutique hotels to this day? How are they operating now versus when you started them? I can only imagine, being, March, April 2020 and owning, 3 boutique hotels.
It was wild. I mean, the biggest fear was that because we were boutique and small, we thought we'd be left out of the recovery protocol because, frankly, we understand that the first guys to be saved are the ones that are too big to fail. So, we didn't know what was going to happen. But, I had, as a team, I have some incredible partners. One who is my partner here at Lucky Communities, who's a lawyer by trade and just knows how to dig into these programs and get there and be proactive and understand what we need to do. But it was a scary time. It certainly was. I don't think we've ever seen anything like it. I don't know if we will, where money just stops flowing. Right, money at all levels, money just stopped. So it was an incredible time. Fast forward to this day, we did sell one of those hotels. Thankfully, it did well. The reason it did well was because of the location of this particular hotel. It was very well centrally located. And if you understand hotel investors and developers, there's a lot of pride that goes into ownership of these properties. So they're willing to pay a premium. It's hard to forecast, the exit of a hotel because there are certain investors who will pay a premium to be in the business. But thankfully, we did okay. We have the other two that we still manage and operate. Those are doing well. I mean, as we know, the economy is still very strong. And once we were able to survive the pandemic, people were itching to get out, especially to a city like New Orleans, where we're all about that social aspect, having a good time, letting loose, all that. So, still got those, but in terms of new business, it's all mobile home parks from moving forward, at least for me.
Yeah. Wow. I'm just thinking, so, did your reservations just, stop completely? There was zero income. And I assume you have loans on these boutique hotels, were you talking to lenders, trying to, get, delays on your mortgage payments and all that kind of stuff? I'm just thinking I would be in panic mode.
It was just like you said. I mean, we're on a bunch of different channels, right? We're on Airbnb, we are on booking.com. We have a whole network of systems that handle the revenue management. But I just remember seeing those emails come in with cancellation after cancellation after cancellation after. I mean, it was incredible. It literally flooded the inbox, right? But thankfully, we were all in it together, right? So we have very good relationships with our lenders. So they did defer payment for quite a bit of time. I think we probably did it for up to a year, as a matter of fact. And that's why, having those relationships is very important. And again, the PPP programs, that helped a lot as well. That brought in quite a bit of cash that we needed to just kind of, stick it out. So look, we were playing defense for a while, right? Like had it not been for the pandemic, we'd be a year into or further into where we are now with Lucky. But look, at the end of the day, if you have the will to survive, it's not going to come to you. There's no handouts, right? You have to go and to look for them. You gotta understand that you have to be creative, and that's kind of how we handle it. But certainly, it was a scary time. I already wanted to pivot towards mobile home parks before the pandemic. And then once the pandemic hit, that just kind of cemented it, right? I mean, yeah. From a risk level in terms of the asset class and investing to just the level of headaches and management that hotels, that's just sort of the nature of the beast in hotels. I mean, the amount of overhead to hit that, to just get a piece of profit, the amount of work to do that is unbelievable, right? I mean, it's a lot of work.
Oh yeah, I can only imagine. The reason I'm kind of digging into the hospitality side of things is because I think you as an operator, if I put my LP hat on, I think you've been through a crisis, right? Like on the front lines, and you've come out relatively unscathed. I'm sure you and your partners had to ante up cash, right? Until the PPP funds came through. And I think that says a lot about you, right? Because you made it through, and your credit's intact, because I know you're doing other deals. So I think that says a lot about you as an operator.
Thanks. And I appreciate that. And yeah, I mean, it is kind of sort of thinking back. I mean, it's interesting to have these conversations because, on a day-to-day basis, you're just go, 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 and you have very little time to reflect. But, to your point, kind of looking back at how we were able to handle that, I mean, it truly took a team effort. And, it was a moment where everyone sort of came together from, the lenders to even the vendors to, the government pitched in. I mean, it was a moment where we all kind of came together and said, look, let's figure this out. How are we going to be able to survive, right?
What would you do? What would you do differently, Alex? Is there anything looking back, that you maybe learned from and would change? And are these how many rooms are these boutique hotels?
Yeah, these are about 20 rooms, right? And we have an F&B component to it as well. I mean, I'll tell you, one of the things that we did well in terms of adapting, because you have to adapt in these situations. One particular hotel is the Drifter Hotel in New Orleans, in Mid-City, New Orleans. And we have about 20 rooms there, and we have an incredible F&B system there. In fact, I would say about 70% of our income for that particular asset comes from the F&B side, because we've been able to create an environment, an experience for our guests. There's a lot of locals that come to the hotel to take a dip in the pool, to have a drink. We did well making it a very well-designed hotel where once you go in, you kind of forget where you are and you enjoy the experience. But all that to say is that, once we were able to open back up, we pivoted from just a system where we let everyone and anybody in with an admission cover, right, to a reservation system, right? And so by doing so, we were able to limit the number of guests that came in. And if you look up the Drifter Hotel, you'll see it can be quite a bit of a party scene, right? But we pivoted from that, since the density had to be less, to more of a high quality, we essentially elevated the drinks that we're offering. We spent more time on the quality of beverages that we're making. We increased the prices on those. We're able to better manage the density, and therefore, bring down the amount of people the amount of staff that had to be there at a given time, therefore reducing the labor costs. And then instead of folks paying, $15 to be there the entire day, people were paying $15 for a 2-hour reservation. And if you remember at that time, when someone takes something away from you, like an experience, when someone tells you can no longer get together and socialize or go to a pool in a social aspect, it becomes very valuable. So when we were able to do that in a safe way, in terms of kind of respecting the COVID rules, it became a place that everyone was wanting to come in. So our income actually improved, our bottom line improved because of that pivot there. So that was an interesting thing. That was a very good learning experience. And it's actually something that we've kept throughout, because it's just easier to manage from an operating perspective.
Wow. Yeah, that's super cool. Yeah, I don't know that much about, the hospitality industry, but I can see, when we talk to sellers, and we always try to create that fear of missing out, right? That sense of urgency. And it definitely, creates action. So that's what we try to implement in our cold callers. But let's flip over to mobile home parks now. Tell us about Lucky Communities. When did you guys buy your first mobile home park? How many are you up to today? And what type of parks are you guys buying?
So we formed in 2021. So we're still a relatively young company with, very ambitious goals. We have our, what do they call them again? The hairy, audacious goals, right? Currently, we're at 250 lots here in Louisiana and Alabama. That's a total of about 5 parks, on average, about 50 units per park. The Southeast is our main market. And even within that market, our submarket currently is Alabama and Louisiana. Being from New Orleans, it just makes it easier to manage as well. But yeah, in 5 years, right? It's, we say this number and a lot of times folks are, they find it hard to believe, without a doubt. But, we want to be at 10,000 lots in 5 years. right? And that is proving to be very difficult to achieve, especially with the current expectations of sellers out there of what these properties are worth, right? So it's a challenge, but we're going to see how close we can get.
Yeah, I mean, just in a year, getting up to that many lots is quite an accomplishment. So I assume you kind of just left everything hospitality behind and said, "Hey, I'm all in on this asset class."
Yeah, 100%. So I have a operations manager that handles the hospitality assets that we still have, the two hotels, as well as the long-term, single family rentals that we have, the short-term rentals that we have. So we have we still have a decent portfolio there. Was able to hire a good operations manager. They handle all that, but we're not focused on the growth on that side, right? I think the hardest thing of any business is trying to manage it and grow it, right? Managing isn't hard if you're happy with the status quo, right? You come into the office, you open up your emails, and if you have a good team, you know what to do. You have a good process, you know what to do. The hard part is balancing that with the growth side, right? Because going out there and finding new deals and getting them under contract and a negotiation, and it all adds up. So that is certainly the challenge.
Oh, I totally agree. And then I remember when we were just starting out, it was, the management income wasn't covering enough for the team we needed, right? So I was using the cash flow from my first few deals to fund the management company, which can be difficult, but maybe you could tell us a little bit about that. How have you guys, set up operations, and what does your property management team look like?
Yeah, and that's very much the case for us, right? We are probably overstaffed right now, with the understanding that we're trying to grow ambitiously. And I've done this a few times now in other asset classes where I'm literally just chasing my tail all day long, and it's hard to do that. So, we're trying to set up ourselves for success. We, in terms of what we stand for, or what we believe the way that we get to our ultimate goals is by following our 3 Ps, right? And that is being process oriented, right? And that is being people oriented, and then also being tech oriented, right? So we try to leverage technology, or the 3 O's, I'm sorry. We try to leverage technology as much as possible, right? I mean, I think this is an industry that's a bit antiquated, and there's plenty of room to improve those operations with technology, with Zoom such as this, with Slack, with Rent Manager and collecting rents digitally. There's no reason to not leverage technology. That's something that we try to utilize to our full extent, right? And then we also have, being people oriented. I think that's incredibly important, right? This is a people business, right? So whether you're dealing with sellers on the acquisition side, or whether you're dealing with tenants, you have to know how to deal with people. As long as you treat people with respect, you're always going to have a positive outcome. I think you've probably seen this, Andrew, where our tenants have a lot of complaints, and there's certain things we can't do about it to help them. But I've learned that if you're willing to lend an ear, or build a team that can lend an ear, that's all they really want, is someone is to be heard. And a lot of tenants in our industry are not heard. They're ignored. Have been ignored for society. So that's been one piece of the key for our success. And then just the process. This isn't rocket science, right? If you create the right processes, if you document them and you repeat it over and over, you're only going to get better. So, we try to leverage those 3 things, and we do so by trying to hire the right people and having them work internally. So, we take away as much as possible from what we call the resident concierge on the ground level, and focus on the team in-house that we have at our headquarters to be able to handle the bulk of the administrative stuff, right? Those are the folks that we really focus on training to a high degree.
And how many people are that is in that team?
Yeah, right now we have about 12. We have about 12 full-time employees.
Okay, awesome. Yeah,
Yeah.
that's probably a lot for 500 lots. So
It is. But we're closing on another 50 lots here in New Orleans in the month of July. So July 2020. And we have another 600 lots that we're looking to finalize negotiations with right now. So we know it's coming. It's we just want to make sure we have the right pieces in place so that when it does come, we're ready.
yeah, kudos for that. What would you say is the hardest value add component that you've come across thus far in mobile home parks?
The hardest value add, it's probably from what I hear, because I haven't done it yet, is the infilling process. And I haven't done it because right now, just with the way that the supply chain, the problem with the supply chain, I'm shying away from the type of deals that need a high level of infilling right now, because we frankly lack the experience, and we understand that it's taken a long time to get homes, and the homes themselves are expensive at this point. And compared to how they were about a year or two ago, I don't know if the price of these homes will come down, but from listening to your show and from other people, it sounds like currently the manufacturers have quite a bit of leverage, and so they can pick and choose who they work with, and they're probably working with those folks or they're prioritizing those folks who they have history and experience with right now.
Yeah. So what are some of the value add, in your current acquisitions? Like, is there vacant homes? Is there billing back water, sewer? What type of value add have you done?
Sure. I think so we've been fortunate enough to find off-market deals where there is a high level of tenant-owned homes. The biggest issue has been that they've been poorly run. We're in situations where, frankly, just the culture of the park needs to be changed, right? They pay cash whenever they want. Mom and pop don't care. They don't have a loan to service on a monthly basis. They keep terrible books. And so, when we took over these parks, that's kind of what the tenant is used to. And so the biggest challenge is coming in there and just educating the tenant, quite frankly, in the Lucky way and the way that we operate. And no one likes change, right? Every time you buy a park, everyone is sort of suspicious of what you're going to do. So our top priority is to go in and make folks feel comfortable and have them understand that we're here to help them, even though there is going to be change, right? So part of that culture change is also coming in and enforcing the rules and having folks fix up their homes, right? If you come into some of these parks when we initially purchased them, they were missing skirting, they were not painted, you had broken windows. And so part of what we do is come in and enforce those rules. And, I went to Frank's boot camp. It was a great experience for me. And I completely agree that even if you allow your resident to borrow money or even grant the money to get some of these small projects done, it'll go a long way. So, we call that the HIP program, right? The home improvement program, where we come in and if you need paint, or if you need $500 to get something done, or if you need the labor, we will supply you with whatever it is you need, because at the end of the day, it's a team effort, and it'll all pay itself back in the curb appeal of the asset.
Totally agree with you. Yeah, no, that's a great program. Where do you feel is the best opportunity or strategy in the mobile home park investing right now?
Good question. Strategy, I think right now it's being patient. Don't do a deal for the sake of doing a deal. You could lose a lot of money that way. There's like everything in life, there's a balance, right? If you overanalyze, you're going to get caught with, paralysis of analysis, right? You're never going to get anywhere. But if you jump in too quickly without dotting your I's and crossing your T's, then, you can end up with a deal that in the long term won't work out. And that's the worst of all situations, because you're going to lose money and you're going to lose time, right? That said, what we're seeing is that obviously there's a lot of private equity and institutional money now into the space, right? I thought it was a genius when I saw this first deal in 2019, and I got into the space only to discover that the cat was out the bag, right? And so that's becoming more and more the case as we progress. But for us, with a strategy where we essentially centralize all of the operations, going after smaller parks that are not desirable for, the PEs and the institutional money has been a good opportunity for us, even coming down to the 30 to 50 unit parks, because we're able to essentially create a portfolio of these smaller parks and operate them at scale through our internal and centralized operations, and by also leveraging that technology, right? And so the way I look at it is that if we wanted to exit, and by the way, we're long-time holders, if it was up to me, we'd hold on to these properties for life. I'm in it for the cash flow, not necessarily for the exit. But at the end of the day, you gotta perform right out, and you gotta make sure it all makes sense, right? So if we were to exit, I think it would make sense to sell the entire business with the operations, because it's already intact to manage these smaller properties throughout the Southeast. So that is a strategy that so far is working for us. That's where we're finding more opportunity, but we're always ready and willing to strike once a bigger deal comes along. We're just trying to be patient, as well as just kind of picking the low-hanging fruit that's out there.
Sure. So 30 to 50 lot parks. What are you looking at utility wise? Are you buying private utilities? Is there a specific setup that you look for?
Yeah, I mean, look, in a perfect world, you have all public utilities, right? But particularly here in Louisiana, I'll tell you, the parks with oxidation ponds are very popular, and by popular I mean they're just everywhere, right? And so for a long time I tried to stay away from those because of what Frank preaches, and clearly they're just not desirable. But in Louisiana, it's something that is manageable. So while we try to steer away from those parks that have private utilities, it's definitely not a deal killer, and we're learning the system and the processes. We're creating those relationships with DEQ and DHS so that we stay compliant with everything. Yeah, in a perfect world, we have water that's directly billed by the city, right? When I find some of those deals, and I'll pay a little extra for those if you don't have to deal with the water at all. If it goes directly from the tenant to the city, from a billing perspective as well, that I love that.
Oh, definitely. What mistakes have you made in mobile home park investing thus far that maybe some of our other operators that are listening could learn from?
I think hindsight is 2020, right? But back in 2020, or the late part of 2020, there were a few deals that we were looking at that we passed on. Again, it was a hard time to kind of make moves, right? We're still playing defense. But there were certainly some deals that even then were ripe for the taking, right? I've approached those sellers again, and they've sold the properties already for up to 50% more than what I could have secured them for just 2 years ago, right? So it's wild, but at the same time, again, hindsight is 2020. Frank is incredible. Like I said, I did the boot camp. I've learned an incredible amount from him, but I would say that the cap rates and valuation tactics that he talks about may be just a little bit antiquated, because you just can't find those type of deals anymore. So I've started, just like any deal in any other asset class, you have to pro forma out the project, right? And if you want to get into the game today, you have to pay for a little bit of the upside, right? That's really what we're finding, is that you're not going to find these deals that are trading for a 8% cap rate on the current income. At least that's not what we have found. Andrew, maybe you've had better luck. I don't know.
How do you find your deals, Alex?
Mostly, so we have an acquisitions team as well, and so we have a acquisition specialist whose sole job is to cold call. So nice. Her job is to simply make contact, right? with that person and try to make an appointment. But once we have confirmed that contact information, it is then my job to go and reach out to that person, create a rapport. If they're not ready to sell today, then hopefully they will be a year or 2 years from now. But it's crazy because I'll follow up every 3 months, and what I found this past month is quite a bit of those leads are already under contract for an absurd amount of money, right? And it's a hard pill to swallow. When you've been in touch with these folks, and then you call them, you're like, oh yeah, but then some will disclose the number, some will not. Those that do disclose the number, it makes you feel better because I just don't know how you cash flow off of those numbers, right? I mean, again,
Sure.
when we evaluate our deals, we're looking at cash flow more than anything else.
Sure. What are the most important things passive investors, we're talking limited partners here, what do you think they need to look out for when investing into mobile home parks?
That's a good question. I think understanding the assumptions on a pro forma, even from a very high level. I'm not saying you need to be an expert, you're an LP, but you should know the basics, right? So if the projected return on your money is heavily weighted on the exit versus the cash flow, then it may not be realistic, because we all know we can, there's a lot of very savvy GPs out there who know how to manipulate the numbers and make a return look good. Pro forma is only as good as how realistic it is. So I would advise them to take a close look at how those numbers are being derived, right? What is your cash on cash that you can expect on an annual basis versus, an exit, 2 years down the line, right? Is it realistic? What is the appreciation in that price from now to 2 years down the line? Now, just like I said, some of these deals are going for, 50% more 2 years later, in terms of what I have found. But it's just a risky move, right? Aside from that, I would say, make sure that the communication is there. Make sure that they're willing to answer your questions, that they're willing to spend the time with you. And at the end of the day, it's all about the trust factor, right? Do you trust this individual, right? Because it's hard to understand the numbers if you're not an expert in finance, right? But if they have a proven track record, and if you trust this individual, then at the end of the day, the numbers are what they are. If they've delivered to you in the past, or if they've delivered to, your colleagues, then most likely it's going to be a good operator.
What does the perfect mobile home park look like in your eyes, and why?
Perfect mobile home park, man. Do those even exist? I think, I would say all tenant owned homes, that'd be fantastic. I think I mentioned direct water bill with the town or the city, where you don't have to worry about the water at all. It's not on you in terms of having to bill back or debate those bills with your residents. And the third would be maybe, if they're not eligible for Fannie Freddie or some sort of agency debt at the acquisition, then do they have the potential to get there for the reposition, especially as interest rates continue to climb. If you have a park that you can safely secure with Fannie Freddie, who will undoubtedly provide lower interest rates, I think that would be the perfect park.
And maybe let's talk about that a little bit, right? Like, I think the economy is changing. Obviously, inflation is still, pretty high right now. The stock market's not doing so well. What do you think the future of mobile home park investing looks like? And how are you guys, maybe what steps are you guys taking now to hedge against maybe a rocky next couple of years?
Yeah, good question. I guess that's one of the reasons I like the mobile home park space. I think there's a lot of potential there. Why? I think simply put, just the supply and demand, right? We can sit here and analyze the economy in many different angles, but just like Sam Zell so famously continues to state, it's all about supply and demand, right? And so we know that demand for affordable housing, isn't going anywhere, isn't going anytime soon. It's only been exacerbated by inflation, right? Meanwhile, prices of real estate, including mobile home parks, continue to go up. I'm not sure if you saw the Bloomberg article regarding Biden's administration's desire to fire up the housing factories. I mean, that was very interesting to see. So if we could work on the supply side, like the administration wants to, and frankly, a lot of people want, there's a lot of room for growth. If we could find a way to, have Fannie and Freddie buy these mortgages from the homes that our residents are trying to buy, that would very clearly lower the interest rates and not treat them like the chattel loans and the type of interest rates we're getting there, right? If we're able to somehow incentivize local governments to allow manufactured homes, from a federal level, that would certainly help, right? We need to just continue to ease restrictions. So I think we'll get there in terms of an industry. I think it'll take some time, but in the meantime, the demand is there, and so we just got to work on the supply side to reach that equilibrium, because we're far from it. But if you're patient and if you're willing to find the right deals, then I think investing in mobile home parks in itself is a way of kind of hedging against inflation, right? Investing in real estate in general.
Very cool. Alex, if any of our listeners would like to get a hold of you, what is the best way for them to do so?
Well, they could reach me at alex@luckycommunities.com. You can also look us up on our website, www.luckycommunities.com. I'm happy to talk to anyone in the industry. Obviously, I can go on and on about this kind of stuff. So feel free to reach out to me anytime.
Awesome, man. Well, thank you so much for coming on the show.
Thank you, Andrew, for having me. This has been a pleasure, man. And keep doing what you're doing. I love it.
Appreciate it. That's it for today, folks. Thank you so much for tuning in.
Would you like to see mobile home park value add projects in progress? If so, follow us on Instagram at Passive MHP Investing for photos and awesome videos from our recent mobile home park acquisitions. Once again, that's at Passive MHP Investing on Instagram. See you there.